What's up, traders? Anthony Crudele here, and welcome to the Futures Radio Show podcast. In today's episode, I'm joined by Jason Shapiro, the founder of the Crowded Market Report. He's been featured in Unknown Market Wizards and specializes in using COT data to pinpoint extremes and market sentiment so that he can position himself into the opposite side of the trade. Join us as we discuss his contrarian approach to the markets, how to get an edge through COT data, and review some potential market scenarios as we face rate cuts and speculation in this election year. Today's podcast is sponsored by FTSE Russell and TradeStation. FTSE Russell is the home of the Russell 2000 Index. Did you know that with an 81% share and 1.6 trillion in institutional assets benchmarked, the Russell 2000 is the top choice by far among institutional investors? Like all US Russell indexes, it's rules-based, transparent, and reliable, regularly updated with the latest IPOs and annually rebalanced. To learn more about FTSE Russell and their products, please go to FTSERussell.com. Serious futures traders, level up your skills with TradeStation's powerful platform. Enjoy flexibility, superior trading power, and save big with 50% off brokerage fees for the lifetime of your account. And you'll also get 10% intraday margin rates on 3 popular futures markets. Open a new futures account today at tradestation.com/Anthony. That's tradestation.com/Anthony. Jason, my friend, man, welcome back to the show.
Hey, thanks for having me.
Great to have you back on the show. A great day to have you on the show, actually, as the markets did really a 180 from what they've been doing the first week of the year. So we're going to get into that for sure. But I want to start off by talking about how you got a lot of traders arguing out there maybe that COT data is not really that valuable when you're looking at it as really a trading strategy, but you've been using it as your main data to trade successfully for decades. And you're really known for using the COT data to take these contrarian approach to the markets. I'm curious, what's the argument for why you use COT data, and to those that say it's really not that valuable?
So for me, my whole process and my whole belief system when looking at markets is trying to figure out what is discounted in, right? That's sort of the base of what you have to try to figure out, so you can figure out if things are so-called overvalued or undervalued and offer good risk reward. So I don't use price as the discounting mechanism. I use participation as the discounting mechanism. So my belief is not, hey, this asset has gone up a lot, therefore I'm going to be contrarian and sell it. That's called fighting the tape, and that's very dangerous. The way I look at it is, well, everybody is long this thing already, therefore the risk reward is to be the other way. So how do we figure out if everybody's long already? And one of the ways is the commitment to traders data, because that shows where people are positioned. So that's why I use it so extensively. As for people's arguments that it's not good and it doesn't work and all that, I can understand that argument. It's just like just about anything else, it depends how you use it, right?
There you go.
And I notice when I put things on Twitter, sometimes people will make comments about it and they'll look at the chart and they'll look at the commitments and be like, they don't see it or they don't agree. And I get that, because it's not easy data. I trade it when there are massive extremes, right? Nothing in between. To me, it tells me nothing in between. I trade it when there are massive extremes. So if I'm seeing speculators massively long something, I'll be looking to get short. And if I see speculators massively short something, I'll be looking to get long. But I always say the COT data, it's very dangerous if you think that it's the be all and end all, because it's not. Speculators can be long something for a very long time before the market turns, right? So just like shorting it because they're long or longing it because they're short, it could crush you. And I think that people should do this no matter how they trade, but I need what I call market confirmation before that happens. So if people are super long something, I'm figuring out why they are long. Part of it is because the trend is probably up, and part of it is the fundamentals are doing something positive. So I like to dig into what are those fundamentals that people are looking at. So then when a new piece of news comes out that supports those fundamentals, and the market can't go up anymore, and I see on the COT that they're very long, that's when I'm looking to short, and not before then, and it's an extremely important part of the whole thing, right? And it's very difficult to go ahead and test that, which is why the COT for a lot of people doesn't test very well, right? And, if you really get into the financial theory of it all, you have hedgers and you have speculators, right? Hedgers are in the market to hedge their underlying. And that's not a profitable endeavor over time. Hedging has a cost, right? You don't get to hedge for free, right? So there's a cost to hedging. So therefore, the other side of it are the speculators. So they should get paid for taking on your hedges, right? Otherwise, they're not going to be attracted to the market if they're not going to get paid to take on your hedges, and you're not going to have any liquidity to do your hedges, right? So that's what trend following to me is, right? The commercials are selling because they're hedging. The trend followers are buying, and they're getting paid to buy. And that's why trend following over time has positive returns. But at massive extremes, I find it goes the other way, right? Or at least the risk reward is to go the other way. This doesn't always work. Look, even my trades where the commitment to traders shows massive positioning on one side and I have the market confirm it, still less than 40% of my trades work, right? Even with those situations, right? Over time, my number's about 38% of my trades are profitable. But the payout, that's what it's all about, right? The risk reward. If you have speculators massively, let's say, long something, and the market does in fact start to go down, well, then what's going to happen, right? They're all going to start getting stopped, right? The moving averages are going to get hit or whatever happens with them. And they all start getting stopped. So that the move down can be pretty extreme relative to how much I lose when I lose on a trade. And that's really the key to it. If you start thinking about it in terms like that, right, then you can maybe see why the commitments to traders can, but it's not for everybody. It's not for every trading process. It's if you're looking for a very high percentage of winners, it's probably not the thing for you. But I think it can help in a lot of ways. I always say, like, COT is not necessarily a great market predictor, but it can be a very, very good risk manager, right? It can help you avoid things that are super crowded, because when things are super crowded, there is some risk that there could be a big move the other way, and you could possibly avoid those type of things, which is an important thing to do, and avoid big drawdowns is a big part of this game. So
Yeah, no, I think you explained that beautifully. Lots of questions to follow up with that. But first thing I want to talk about is really, I've become addicted really to your Twitter account. I think you are really are doing a fabulous job with it. I mean, not only is it educational, I think it's entertaining. It's a lot of fun to watch. But I'm also becoming semi-addicted to like what you're putting out and what you're looking at for the COT data. And it's funny, it takes me back a little bit because for me, I come from the floor. So I first started looking at COT data years ago, and I kind of went away from it, and you've brought me back in. And so what I want to talk about is just give everybody, I'm sure most of the people listening to this have either followed you on Twitter or seen you on Twitter. I would recommend, if you haven't, to go and follow Jason on there. He's great. When you put out those charts and you'll say something like, oh, this is interesting. Like recently you put out something about the NASDAQ. Explain to everybody what it is that you're looking for in those charts.
So you've got commercial traders, which are hedgers, and then the opposite side of you have speculators, which are broken down into large and small speculators, or
Yes.
what they call reportable and non-reportable, which just means if you have a certain amount of size, you have to report it to the CFTC that you have this size, because they're trying to stop people from cornering a market, right? And everybody else falls into the small or non-reportable category. So what I'm looking for as a market turn picker, like I say, if I'm looking to short something, I'm looking for the speculators to be super long relative to history. And by definition, then the commercials will be super short relative to history. So that's the first sort of screen I do for trades that I'm looking at. And like I say, just because it's there does not mean I put on a trade, right? But it is the first screen for me. And I have this list of markets that make that screen. And then once they make that screen, okay, I can buy this, I can sell this, I can buy this, I can sell. Now I'm following those markets very closely and watching for sort of how it reacts to the incoming news flow. So like NASDAQ right now is showing pretty extreme longs, but I'm not short NASDAQ, right?
Yeah.
I was short NASDAQ. Let's say, for example, we believe that what's pushing the stock market here is the continued belief of lower rates, right? So let's say Thursday we have a CPI number come out and it's lower than expected, which should continue to make people believe that there's going to be lower rates, and bonds are up on that, and the NASDAQ probably goes up on that. And by the end of the day, the NASDAQ fails and closes down. That's where I would look to short the NASDAQ.
Why?
A, because the commitment to traders is set up. and B, because now the market is no longer going up on news that should be supportive of it. It's what I call a news failure event, right? It's like a sell the news event, is what most people refer to it as, right? So, like, if the market's not going to go up on weak inflation data, which we can argue is what's been driving it, then what is it going to go up on? So I think the risk reward at that, and the reason is because people are super long already. So where's the next dollar coming in to buy it? Now there's always a dollar somewhere that could buy it, which is why there are losing trades. But what that will give me, let's just say that happened. What that, for the way I trade then, is if it takes out that Thursday high, I get stopped. So I'm essentially risking 1 day of volatility, right? Whereas if it turns and the market starts to go down and all these longs start getting knocked out, then the return is much more than that 1 day of volatility. It's all just a risk reward thing. You know what I mean? I don't have, unfortunately, any ability to predict the future in any way, shape, or form, other than we're all going to die one day and we're probably going to have to pay taxes. But other than that, I don't really have any ability to predict the future, unfortunately. Wish I did. So I just have to pay risk reward, and this is how I see risk reward for me.
Yeah.
The ultimate answer, obviously, which is sort of the obnoxious answer for people that want to say COT doesn't work as well. Here I am. You know what I mean? I just had year number 23 in a row that was up, positive returns. And all I do is use this COT data. So at least for me, there's something to it. Other people trade other things I don't trade, and they can make money doing that. RSI, moving averages, whatever it is they do, right? That I don't do. And I can sit there and argue, hey, I don't think that works. So who cares what I think? If it works for you, then it works, right? And it's the same thing with the COT. It might work for me. It might not work for you. Good enough. You know what I mean? I'm not here to tell people how to trade and that they have to trade the way that I trade, right? All I'm really here to do, and how I went public with all this stuff, is this may be something that can help you in your trading, right? So if it can, I'm presenting it in a certain way, and I'm talking about it in a certain way to help you learn about it, and hopefully that can help people in whatever it is they're doing with their trading.
Absolutely. And it's funny, I asked you why, but I knew the answer to that question and why you did that. And I love the way that you answered it. And it goes back to what we talked about really from the beginning, is that just because someone thinks this doesn't work, it just means it's not working for them. I mean, that ultimately is it. And I go back to, I used this years ago, and then I got away from it. I came back to start using it. Like I said, more and more I'm watching what you've been doing, and I think it's really great, and it's really brought me back into looking at COT data. And it goes back to the crowded market report as well. And I think that your thinking is really, it's really transparent in the sense of, look, at I know that we're overbought or we're oversold, but it's when the setup starts to make sense. And the CPI one, I think, is really such a good one, because what I think is super interesting about your work is that it's not necessarily starting from a technical place. It's starting more of a macro place. Like, what is the theme? Or it could be a technical theme. I'm not going to put words in your mouth, but what is the theme? What is the driver of the market? And then once that driver of that market theme starts not to work and the market is crowded in that direction, that's when the risk reward changes.
That's it. That's the whole thing, man. And look, it's just like, and there's a bunch of people on Crowded Market Report now, right? And we
Yeah.
have a Discord, and we talk about these trades, and I watch what they're doing, and they're going through the process of learning it, right? And I've been doing this for over 20 something years. I'm still in the process of learning it, right?
Exactly.
There's nothing perfect, as you very well know, right? But you have to know, and it's very hard to know. What happens usually with our guys is, so we have a trade that works. The COT is set up. We put it on. All right. The news failure happens. We put it on. Great trade. It's wonderful. Now everybody is just foaming at the mouth, waiting for the next one, right? Because they see how great it is when it works. And I got to tell them all the time, dudes, it does not work all the time. Okay. And you've got to be cognizant of that fact, because it's just like anything else. It does not work all the time. Yes, when it works big, but it doesn't work more times than it does work. So you can't get crazy here, right? Right now, the NASDAQ is showing as a sale. Does that mean the NASDAQ's going to go down? No. The NASDAQ pretty much showed a sale for, I would argue, 3 years, from 2014 to 2017, and it never went down, right? So if
Yeah.
you were selling it and staying short just because of COT and all that, you got completely run over, right? If you waited for the news failure, then you lost, but you probably didn't. Well, I know because I was trading back then. There weren't that many news failure trades on top of it to make you lose that much. So it's just like any other trading process that you're going to use. The risk management and the discipline is actually 10 times more important than actually what you're trying to do.
Yeah. I mean, this is why I think I get along with you so well. As I've said so many times on Twitter and in a lot of these podcasts, it doesn't matter what strategy you use. It's all about how you execute your strategy. Everything works sometimes, nothing works all the time. And until you've done this, like you and I, for a period of time, you really don't truly believe into that. You believe that, oh, one day you found this fib retracement or something that works perfectly, and you think you found something. In reality, you found something that worked in an instance.
And also that goes right into the other lesson, which is all about overtime. How are your returns going to look over time? This particular trade should basically mean nothing. Whatever this particular trade is, it should really mean nothing, right? It's all about how does your returns look over the next 5 to 10 years, right? It's not about how it looks this month or this quarter. I have down quarters, So all that stuff takes time, unfortunately, unless you can learn the lessons quicker, which really takes in believing what people are telling you, which is a hard thing for people to do, right?
No, absolutely. And let's stay there for a minute. I mean, markets can be dynamic and environments change, and they could change relatively quickly, or they can stay the same way for a period of time. So the question is, how do you adapt your strategy to the different market conditions or even unexpected events? Like even when you go back to the end of last year, I mean, I would consider that an unexpected event where all of a sudden we go for higher for longer, and then everything really shifted with the Fed, and everyone's looking at 3 rate cuts on the dot plot, and Fed funds are telling us there's going to be 6, and it just totally changes really the market environment and how that may or may not impact the way you look at COT's reliability.
It doesn't impact how I look at this. In fact, the COT is what saves me from that stuff, right? Because I can't see the sudden change and I don't have an ability to do that. But like for example, I was not bullish and I tend to be bullish stocks over time for obvious reasons. But I was not bullish when that low hit in October. And in fact, I think I said in my newsletter that this is not a time to be a hero. This is the time to watch risk, right? Well, as it turned out, that was the exact time to be a hero, right? um, so, but the COT did catch the move, not in bonds, not, you can argue it did in stocks, although I didn't catch it in stocks because I didn't read the news failure correctly, or maybe it just didn't happen at all. But we caught it in other assets. We caught it in the Swiss franc and we caught it in the Canadian dollar. And simply because the COT was there and they stopped going down on bearish news, right? So I was able to make money during that move up without being long stocks, without being long bonds, and without worrying about the whole thing of what you're talking about. The environment changed, the narrative changed, the this and that changed. To me, the point is people were super short, let's say like the Swiss franc, right? And then the narrative changed, which gave the Swiss franc a huge boost because people were so short it and they had to get the hell out, right? You can look at the COT and see that people were super short the Dow at that point too. Why I missed that trade is for another day and another conversation. But, it really, I find that the data keeps me away from having to worry about that and reading something that I really can't read very well, which is the future, and how things are going to change the narrative in the future.
Yeah, no, I love your honesty about how difficult this is because it really is. I mean, even with your success, it's so important for us to stay humble and grounded throughout these times because we've been there, right? And so let's take it to current day. I mean, we had this massive rally at the end of 2023. We're kicking off 2024. We had a weak start with the markets, and then we had this big rally today. You and I are recording on January 8th, and we saw this big move. I don't know what the NASDAQ closed up over 300. S&P was up big as well.
A lot.
Is the current COT data revealing anything significant about how traders are currently positioned in the market?
Yeah, I mean, from what I see, it's saying that they're two long stocks here. Now, to me, there hasn't been anything unusual, right? We had that massive rally. People wanted to sell it. They didn't want to sell it until the new year, right? Because of the whole tax thing or whatever, right? So they didn't. And then the new year came and they sold it. And so it went down and now that's over with. And so now it's going back up, right? I think that's pretty normal, COT or no COT, right? But now I do have things that are saying that in the COT is giving me sort of window to sell stocks here. And I'll make a few comments. And I've already made the comments that A, doesn't always work. COT doesn't always work, right? B, it can go a long time before working, right? That's my first comment. My second comment is just in general, shorting the stock market to me is the single worst trade in the world ever invented, right? So I would caution anybody, COT, not COT, on trying to short the stock market. If you want to get bearish the stock market, to me, go flat. Okay. At least you can't lose money, right? You might lose the potential to make money, but at least you're not losing money being short. I really believe that shorting the stock market is just, it has upward drift over time. So, you're fighting upward drift over time, right? You're fighting what I believe makes the stock market go up over time, population growth, okay? Some inflation, right? And then productivity, which is human beings need to find better ways to make profit, which as long as we have a free market system, as long as we're paid money, that's always going to be there. So you're fighting things that are not going away. Population growth is not going away. Inflation is not going away, and productivity is not going away. So you're fighting that if you're shorting the stock market. Doesn't mean that I don't take short trades on the stock market. Sometimes I do, but I hate them when I do them. And I just think of all the trades on the planet, that is the worst trade over time to try and do. So I caution anybody, COT, not COT, whatever. I caution anybody from even playing that game, quite frankly.
Well, it's the hardest trade because you have the weakest hand, even intraday. I mean, you're fighting against the grain, even when we have a primary bearish trend. It's even for me as a day trader, a shorter term trader, it is always difficult to be short because, like I said, you're going against all of those things you just discussed. And even on the short time frame, it's not the easiest. But
No,
I guess
your day trade, it's a different story, right? But
it's a different story, but it's
just in
still,
general, just in general.
yeah,
I mean,
no doubt.
and if the market does go down, okay, well, then that just gives you a chance to buy it. Like, oh,
Yeah.
well, you could have shorted in 08 and 09 and made a bunch of money. Sure. But you know where you would have made more money? Was buying it down there in
Yeah.
08 and 09. You would have made more money doing that than shorting it, right? At the top, right? If you somehow pulled that off. So I have come to caution every short stock idea, every short stock index idea with think about it. This is really what you want to do. And it gets worse than that too, because if it actually, the worst thing that happens is if it actually works, because making money on the short side to me is the most addictive. I always compare it to being addicted to heroin, which feels good at the time, but ultimately destroys you, right? At least I haven't done heroin, so I don't know, but I would assume it feels very good at the time. Otherwise, why would everybody be addicted to it? And it ultimately destroys you. And I think that shorting the stock market is the same thing. I have seen people make money on the short side. I've made some money on the short side before, but there's no better feeling. You're like the hero of heroes, right? Everybody can make money long, right? The market just goes up, you make money. Hey, everybody does that, right? But if you make money on the short side, you're a hero. And it just psychologically, it will kill you. You'll never get over that addiction. And now you're fighting a market that most of the time goes up. So I caution anybody.
No doubt, it definitely is the riskier trade is, and I want to move on and maybe talk a little bit about commodities because when I think of COT data, really it begins with me in the commodities markets because when I first started in this industry, commodities were really where I saw most people looking at COT data. The indexes really came along later for me, and I'm curious. We've got crude oil, interesting kind of start to the year, wild day today, natural gas, gold. What are you seeing in any of those markets that maybe you think, coming off of last year, coming into January, potentially setting a tone or a trend in the commodities markets for 24?
One of the most bizarre things, and I've put this on Twitter in the last few weeks, going on in the commodity commitments of traders stuff, is in the gasoline RBOB contract, right? Which I'm just looking at here now, where usually when a market goes up, the speculators are getting longer because most of them are trend followers, right? And when a market goes going down, the speculators are getting shorter because they're trend followers. We've massive amounts of buying in unleaded gas here, right? This is about the longest the speculators have been in unleaded gas in 2 or 3 years. So clearly, it's not just the trend followers involved here. It's got to be the fundamental people, right? I do know that there's a lot of trend following programs out there that won't short energies; they will only long energies. So maybe that's why they're not showing up there as well. But I think it makes it very hard. Again, not impossible, But if you have the biggest long position you've had in over 2 years in unleaded gas, I think that makes it very, very hard for unleaded gas to have any kind of sustainable rally. It doesn't mean it can't rally. It just did rally a few weeks ago, but we're right back, almost right back down to the lows off that rally, right? So that to me is the most amazing thing in the commodity markets right here. And it seems like a lot of people are looking to pick the low in crude here. Or pick a turn in crude here, which makes sense. You wouldn't think that crude is going to zero, right? I mean, it's a commodity that everybody has to use, right? But
it's crowded.
well, crude's not necessarily crowded, but this RBOB thing is very crowded. So clearly, there's going to be, and this gets into sort of being able to read across the COT matrix, as I call it. There's going to be correlation between RBOB and crude, clearly, right? So I am not looking to buy NMD energies here, simply because of that reason. If anything, I would get long crude maybe and be short the RBOB against it and do like a spread trade like that, because it's just so crowded long there.
That's interesting.
Other than that, the only other thing I'm seeing really is in some of the grains, we're starting to get pretty overdone on the sell side. These are acting more normal, like soybeans and like the whole soybean complex here, which has been going down for quite a while, is starting to show some pretty good crowding on the short side. So again, we wait until we get some kind of market confirmation, which could be, this Friday. We have the WASDE report, which is the big, grain report every month.
Yeah.
If that were to come out super bearish and the market were to refuse to go down on that, then I would be looking to get long somewhere in the grain complex. And it's really soy meal, soy oil, soybeans, just about any of them could be the one there. I see that soy oil had a massive reversal day today, which may or might not mean anything, but I'm waiting for the Friday WASDE report to see what happens with that.
What about gold and silver? They've been getting a lot of eyes on them over the last couple of months. Anything in there? No?
Too crowded. Crowded long in gold. And,
Yeah.
People are like, oh, you hate everything. Well, the truth is I never wanted to be a part of gold long. And in the first week of October, we saw, and this is all, I think I said it on Twitter. I think I made a video about it. And it's definitely on my reports where gold finally got to maximum short levels in the first week of October and had a reversal day on bearish news on a Friday, which, as it turned out, was the day before, the whole Hamas thing happened on that weekend, right? And so when that happened, gold gapped up 50 and it hasn't looked back since. But starting in about mid-November, that trade was over for me. The crowdedness was out. Doesn't mean they were maximum crowded long, but the crowdedness was out. So I take my profit because that's the game I'm playing, right? And now we've gotten pretty damn close to crowded long on gold. So I'm not a buyer of gold. I would be more of a seller of gold than a buyer of gold.
I want to talk about interest rates with you because we mentioned it briefly in today's conversation. We talked about how really, I don't know if you want to call it the Fed pivot or not, but you go back in towards the end of 23, where all of a sudden you're looking at 3 rate cuts on the Fed stop plot. I'm curious, did you see anything in 2-year, 5-year, 10-year? I mean, we saw the CME Fed Fund futures jump, and they're actually predicting 6 or even 7 rate cuts next year. I'm curious, you seen anything in COT data there?
So I have a few opinions on this. The first thing is the COT data has basically been rendered useless right now in fixed income because there's been such a big basis trade being put on by these huge hedge funds, which essentially means they're buying the cash bonds and they're selling the futures against it. And they're making some little tiny piece of money, and then they lever it up 100 times. So that little tiny piece of money becomes very big. So all that leverage that they're doing there is showing up in the commitments of traders data. And showing them with a huge position, but it's skewed the data because that has nothing to do with direction, right? Because they don't have directional risk; they're just paying a basis trade. So that has skewed that and has stopped me from, quite frankly, being able to trade and or get a decent read on the positioning in fixed income. If you want to talk about what I think, in a way, it's almost like too easy for me, right? It's so easy to say, and by too easy, I mean it's so easy that you shouldn't do it, is what I'm trying to say, right? It's so easy to sit here and say, the curve's going to steepen. You got to short the long end here, right? And everybody I know is saying it, and every macro person I know is saying it, and it makes sense all day long. And my problem with that is the market a lot of times, most of the time, doesn't make sense, right? So if you're going to talk about crowded, I feel like every macro person is doing that. And so therefore it's probably going to screw them. And I was super bearish, as many people know from my videos, in particular, starting like in the summer of last year. I was making these super bearish videos about TLT and just begging people not to buy it, like telling them that they're making a mistake, trying to low tick the TLT. And I was right for a while. And then I didn't catch the bottom. Then, of course, it all ripped. And now I'm kind of the other way. Like, I feel like it makes perfect sense to me. Well, you and I can sit here, and everybody I talk to, we can all sit here and talk about how it's insane to discount in 6 rate cuts over the next year.
Yeah.
Where is that coming from? Like, how is that even possible, right? It's insane to say they're going to cut rates in March and then every other meeting for the rest of the year. It seems almost impossible. And so if that's impossible, then clearly you want to short bonds. But I don't know. There's just something that smells bad to me on that
Oh, it
trade.
does.
It smells bad, So can I argue why they could cut rates 6 times? I guess I can make up something, but I'm not going to fight it. It's my point. At this point, I have no interest in fighting it, even though I can see the macro argument.
Yeah.
This
Let's
is
talk
again
about
why the COT and why the process and all that is such a big part of my life, because it keeps me out of the trouble of doing something stupid like that. You know what I mean?
I love it. Election year. Not sure how much you follow this in terms of potential bullish or bearish market scenarios, but is there any nuance? Have you noticed anything that may be something we should be keeping an eye on coming into an election year?
I mean, from what I've seen, these election years tend to be pretty bullish, right? Over time. That's about the only thing I could say about that. Who's going to win, who's going to lose, what it means for the market. I've never believed in any of that stuff anyway. You know what I mean? When Trump got elected, I had so many people that were, the Trump haters were telling me that, the country was going to end and you had to short the stock market. And the stock market went straight up. And then when Biden was elected, it was the same thing. All the people that, hated the Democrats and said that Biden's half dead and his policies suck and the market's going to crash, and meanwhile the market's gone maybe not straight up, but it's on highs, right? So I never believe that there's any correlation between any of it, quite frankly. There's clearly short-term volatility because of some of the things that the government people could come out and do and try to implement. But I think that people have ways of being smarter than the policy. You know what I mean? They make this tax policy, well, people figure out a way around it. You know what I mean?
Yeah.
They make this export policy, people have a way around it. And I don't know anything about it, but like you take this NVIDIA thing, we're not supposed to send chips to China or something, right? Well, what happens if NVIDIA sells chips to somebody in Europe and then they sell them to China? Like, I don't get it. I just don't get it. And there might be something that I literally don't get, that maybe they are catching on to that if someone's doing that. But I don't know. If I'm some dude in South Africa and I buy a container of NVIDIA chips, who's stopping me from then turning around and selling them to someone in China? Like, I don't understand. So I'm not a big believer in government policy as an effect, at least on any kind of medium to long-term effect on the markets. Because if you were, then you would be shorting the market all the time, because the government,
Exactly.
is incompetent. As we know, they waste money, and then, they're all a bunch of, well, let's not get into it, but you know what I'm saying. You'd be short the market all the time if that's what you were doing.
Well, it goes back to the weak hand being short the market, and it's just not an easy trade. And over time, that's been proven over and over and over again. A couple things I want to end on today. One is I really want to talk about time frame a little bit with you. When you see these trades set up, what is the typical? And I know this is hard because I think it's price in, price out, right? But what is the typical hold time for you going off of an indication that you talked about with the COT data and that gets you in the market?
It tends to be about a 2 or 3 month period. When I
So
have
you're holding them that long?
when I have a winning trade, yeah, because
Yeah.
what will happen is, okay, let's say I get it, a winning here. Let's say I buy something and okay, it starts to go up a little bit, and maybe some of the shorter term people get stopped, and then okay, it consolidates a little bit, and then it goes, then some positive news comes out and it goes up, and now maybe some of the medium term people are getting stopped, and then it consolidates a little bit, and then now the narrative changes and it goes up a lot more, and everybody gets stopped of the shorts, and I'm out. That usually takes about 2 to 3 months. There have been ones that have been shorter. I've had trades that lasted 2-3 weeks. I had one trade one time that lasted like, I don't know, 19 or 20 months, right?
Yeah.
But typically it's 2 to 3 months.
Well, anytime you have a winner on, you never want to cover it, right? If it's going your way. I mean, the goal is to try and hold the trade as long as you can if it's a winner.
It is, but again, I don't guess when I do it. If what I'm playing is people are super short, then when I'm getting out is when people are no longer super short. They're now neutral, right? The position is neutral. So they went from super short to neutral. The market went up. I take my profit. I don't worry about what happens from there. Does it mean the market can't keep going up? Of course, it doesn't mean that, right? Market can go up, or can go down, but it's just not. It's going to do it without me,
Exactly. Positioned right now, any positions you want to share with us and how you're currently positioned in the market?
I have nothing on. I'm looking to get short the Nasdaq if I can get the right thing. I'm looking to get short gold if I can get the right thing. I'm looking to get short the soybean complex if I can get the right news failure type of thing. If I can get the right market confirmation in those markets, and those are the trades I'm looking to make. Until then, I'm sitting on my hands and waiting, which is also very hard to do, but it's what I do.
Well, man, I got to tell you, I really appreciate you sharing all this with us today. Like I said, I've grown to love your Twitter more and more. Explain what everybody would get if they went and signed up at the Crowded Market Report.
So we have a weekly newsletter that gets sent. It talks a lot about the COT stuff and my interpretation of the COT stuff and what the macro picture might look like because of that COT stuff. And this was really, before it was a newsletter, it was just for 20 years, my notes on the weekend of what I'm looking to do this week, just to try and keep me disciplined. Here's where the stuff is set up. Here's the information I'm looking for that would give me a news failure event. And that's a trade. So you get that newsletter. We have a Discord page. It's very, very active. I'm on there, but even more important than I'm on there, there's a few hundred other people on there as well. Some of whom are pretty smart people and look at other things. They have taken what I do. They've enhanced it in their way. They talk about what they do. They talk about things that I don't even get involved in. I don't trade options. A lot of people are talking about trading options. I don't day trade. A lot of people are talking about day trading. It's become a very good community of people that are really helping each other, quite frankly. So you get that. And then we usually do talks like on Friday afternoon when the COT data comes out. We'll get on and we'll do like an audio on the Discord where we'll talk about, hey, this is what the COT is looking at. This is what we're looking at with that. And then Sunday night, our report goes out on Sunday in the afternoon, Sunday night now at like 4 or 5 o'clock Eastern time. We're doing a Zoom and everybody that's on there is welcome to get on the Zoom and we'll talk about, hey, this is what the report is saying. This is what we're looking at. And we'll sit there and debate it. And other people will, I'm very much into other people having an opinion. It's not just me. You know what I mean? I'm right or wrong just as much as anybody else. Right. And I love to be pointed to where I could be wrong. Right. And we have a bunch of people on there, computer science people, and they're taking the DOT data and they're testing it and doing tests and saying, hey, well, I looked at this and actually it doesn't work that well here, or it does work that well here. And we discuss that. So that's kind of what you get as a member of. Plus, you get the charts, the COT charts come out. We did a thing. This is all beyond me, but my partner did a thing where he made the COT chart. I'm sorry if I say this wrong, but like an add-in to one of the charting services. I should know this, and I'm sorry that I'm saying it wrong, but you can take it and add it into TradingView, I think it is. So it becomes an indicator in TradingView based on our COT charts and data and lookbacks and all that stuff. So, and we're constantly trying to upgrade this thing. I didn't ever know that this thing was going to turn into what it has turned into, quite frankly. I thought we'd get like 30 or 40 people on there and we'd kind of just talk about markets all the time. And it's kind of taken on a life on its own. So as it's taken on a life of its own, my partner is really trying to build it and keep improving it so that people are getting value out of it.
Well, I love it, everybody. It's crowdedmarketreport.com. You could follow Jason on Twitter at crowded_MKT_RPT. What I love about it, Jason, well, obviously, I think very highly of you. I mean, you're the real deal. I love how candid you talk. I love your honesty, the clarity, and I think that this is something that could be added to anyone's strategy. And so I think that whether you're a technician or a fundamental person, this is a great addition to your strategy. So once again, go to crowdedmarketreport.com. Jason, I know we're first week into the new year. I don't know what the cutoff is, but I'm going to say Happy New Year to you, my friend. I appreciate your time.
You too.
And I look forward to reading more of your tweets and your reports. Thank you so much for coming on Futures Radio Show today.
Thank you. Thanks for having me.